Hello, everyone, and welcome to another edition of the Smart Investor Market Update, where smart investors get their up to date price analysis and market information. It's good to be back with you guys. As you know, our company here is based in Florida, and we had some difficulties with the power situation and all of that. So it's good to be able to broadcast again, and everything is up and running in terms of our show. Now the hurricane passed through and it really did a lot of damage, especially in the Key West area and in the Caribbean, St. Martin, Barbuda, Cuba. Just a number of islands got utterly devastated. So we hope everything can get back up and running in short order. Also, thank you all for your emails that have been coming in. I missed a day or two, and I got emails essentially asking what was the position with the broadcast. So that is it's nice to know that people were actually looking out for my well-being and looking out for the videos. Moving on, okay, we have in front of us what has happened. We missed the Monday broadcast, and this is a chart of Apple. Now, Apple recently had a new event, or today had an event, where they announced the iPhone 8. I didn't really catch all of the event, but there was an iPhone 8 and apparently a new iPhone or iWatch that doubles as a cell phone. I will have to verify that, but that is the information I am getting out of the event. Apple stock today, we see that the market is liking the news. It is up slightly on the day, not up a lot. We see the market went down to just shy of 160, and we're currently at 163.27, just shy of the new high, up at 164.94. So maybe this news can lift the market higher. Apple stock has been in an uptrend for a number of years recently, so a lot of buyers are already in this stock. News like this is not really earth-shattering. You could get a positive bump, or even the markets could turn around after that. This is really a day traders type of thing or phenomena. Now looking at the broader market, the S&P 500, let's just bring up that chart, or futures chart. We have soared up to a new high in the markets. The S&P 500 is up nicely. Actually, since yesterday, the market was up sharply, and we have follow through buying here with the S&P 500. The market is up 5. The Nasdaq is up 9, and the Dow is up 60. Yesterday, the Dow was up over 200 points. Now, this S&P 500 on the futures chart means a new high on the S&P 500. Now, let's see if the market can close above the old high. The old high was 2,488, and this high so far on the day is 2,494. So if we can close above 2,488, that would be fairly positive for this market, and it would go to show that the bulls are in charge of this market here. Not to say the market cannot turn around, but at this point in time, the trend is up. So the market is up, and I would be looking at opportunities to tighten my stops under these markets, or buy new stuff. Now, looking at the U.S. dollar since we last spoke, the U.S. dollar index, you notice I keep coming back to the importance of this 92 level. The market traded below 92 and closed the week below 92 level, which was very important for technicians especially, and computerized trading models who trade off of these automatic levels. So the market traded below, and look, the market came back up and is testing that area of resistance. This was the area of support. Once it breaks that area of support, this area of support theoretically turns into resistance, and that's exactly what's happening. And what normally happens is that the market will come to the resistance line and then head back down. That's what normally happens. Will it happen in this case? We're not 100% sure, because the markets can do whatever it wants to do, but that is a scenario. Looking on the weekly chart with this US dollar index, we see a beautiful closing candle below that low, that 92 level. So that is very positive if you are a US dollar bear. And we'll continue to watch how these currencies react. Currently, the index is at the resistance level, interacting. The market can even come above and then go back down. This line is not a line in the sand. It's I would say it's more of a general area and not a line in the sand. Now, longer term, this means that if we continue to move down in the US dollar index, this would mean that a top has been put in the dollar. A longer term top could have been put in the dollar, and that could see the market go down for a number of weeks to a number of months. That 105 level could represent a high in the value of the US dollar, so we'll be keeping an eye out on that. And the recommendation would be to have some bearish dollar positions for the longer term. Looking at the euro currency, see the market in a tight range, a triangular situation, market in a range, and what we want to see with the euro is the market break above this 121 region. Gold market, gold declined a little yesterday and Friday, and we see the market bouncing back in this 1335 region. Now, the thing with gold is we want to see the market came above resistance in the 1340 region, and what we want to see is the market continue to make new highs and possibly take out this 1380 level. That's something I'll be looking for over the next couple of weeks. Now, what could happen is that the market could pull back to this line, this triangular line, hug the line, and then attempt another move upward. So that is in the realm of possibility. Just because the market pulls back, that does not mean the market is not bullish. The market can move up from here or have a slight pullback. It's looking fairly positive now because we're seeing the market rally off of that 1335 region. Looking at the Canadian dollar market, was at a new high last week, and we see the market pulling back today, kind of against the trend of the US dollar, because the US dollar is down on the day while the Canadian dollar is down. Now, looking at crude oil, we see the market not much change. I heard folks asking, or not I heard, folks were emailing in to see, with the increased demand in oil and gas in Florida, would that have an effect on oil prices? And as you can see, not really much. Market is still range bound in this consolidation pattern, and I wouldn't be looking for any opportunities until we break out either to the north or the south of this line. Okay, so that is essentially a comprehensive market update of what's going on in the broader market. If you have any questions, remember to send it to info@smartinvestorcentral.com. It's good to be with you guys again, and we'll be live again tomorrow with another market update. Thank you very much for listening.